We all know that price tells a story, but what if we could get more precise? What if we could decode exactly what the crowd is doing right now? Welcome to Tactical Tuesdays, where we dive deep into trading tactics that separate the good from the great. Today's tactic is the power of volume. We'll show you how to spot smart money moves, filter out noise, and find the best entries and exits. It's not just about what price is doing, it's about what the market is saying. And by the end of this video, you'll understand exactly what the crowd is whispering and screaming. Okay, let's jump right in. First off, what is volume? In simple terms, volume is the number of shares or contracts traded during a specific period. Why is it so important? Because it's the heartbeat of the market. While price is the pulse, volume gives us context. More on that later. Why is volume analysis so underrated? Well, many traders focus solely on candlesticks and lagging indicators, but volume adds a new dimension, revealing the true sentiment. The basics are simple. If price is moving up and volume is increasing, it's showing bullish conviction. If price is falling and volume is rising, it suggests bearish acceleration. That's how we can spot the trend strength. But there's more to the story. Let's start with one of the most common volume patterns, the breakout. When price breaks a swing low or swing high, the volume level can give us clues about the move's validity. A breakout with high volume is like a roar of approval from the crowd. It means there's strong interest and the move is likely to be legit. Imagine price breaking a resistance level. A high volume breakout confirms that the buyers are in control and the uptrend is gaining momentum. On the flip side, when a breakout occurs with low volume, it's more like a whisper. It could be a fakeout or a sign of indecision. Picture this: price breaks support, but with low volume. This might indicate that sellers are stepping in, and the downtrend could be losing steam. Now let's talk about volume climax. This pattern is often overlooked, but it's like a turning point in the conversation. A volume climax happens when the volume reaches its highest point, signaling a possible change in sentiment. For example, after an extended rally, price might suddenly reverse, but with a massive spike in volume. This sudden surge suggests that the market is changing its mind, and a top could be forming. Similarly, in a downtrend, a sharp reversal accompanied by high volume might signal a shift in momentum and a potential bottom. Think of it like a heated debate. At first, there's low interest, but then suddenly everyone is talking about it. The volume climax represents that turning point where attention and activity peak before the conversation shifts again. Here's a quick recap. High volume breakout, it's a valid move. Low volume breakout, it's a potential fakeout. Volume climax, it's a possible reversal. But remember, volume isn't a crystal ball. It works best when combined with other indicators and analysis techniques. For instance, volume can help confirm entries made with other indicators. Imagine using an RSI divergence for an entry. You find a lower wick of a candle touching the 30 line, indicating potential bearish reversal, then you check the volume. A rising volume level confirms that the sellers are taking charge, making it a stronger signal for a short trade. Now let's look at another powerful combination, volume and OBV. OBV stands for on balance volume. It's a cumulative volume indicator that helps smooth out noise. How does it work? OBV adds volume to the current bar when the price moves higher and subtracts volume when the price falls. This creates a moving sum of volumes weighted by price changes. It's like keeping track of who's buying and selling throughout the day. Here's an example. Price is moving sideways, but the OBV is increasing. This suggests that despite the sideways price action, buyers are still accumulating the stock. So even though price hasn't moved much, there's reason to believe that a breakout could happen soon. This pattern hints at a potential bullish reversal as buying pressure outweighs the selling pressure. Let's explore another scenario. Price is trending downwards and the OBV is decreasing. This pattern indicates that selling pressure is dominating the buying pressure. So as price keeps falling, the OBV keeps dropping, suggesting that more sellers are entering the market. So the downward trend is likely to continue. Now let's dive into how you can use volume for better entries and exits. Volume can help us filter out noise and find quality setups. For example, let's say you trade breakouts. Instead of jumping into every breakout, you can use volume to select only the ones with strong conviction. As we discussed earlier, A high-volume breakout is more likely to result in a winning trade. On the other hand, low-volume breakouts can be misleading. So by filtering on volume, you can improve your breakout strategy. But that's not all. Volume can also help you spot reversals. Remember the volume climax pattern. When the volume spikes, it might be time to consider the opposite trend. By watching for volume, you can potentially get out of a trade before the reversal hits. It's like having an early warning system. And finally, let's talk about shorting. Yes, volume is useful for finding shorts too. If you see price breaking a resistance and volume is spiking, it could signal a big move. In that case, it's worth considering a short trade. Similarly, if price is breaking support and volume is increasing, it might be time to look for short opportunities. Just like with longs, volume helps you filter out noise and identify high-probability setups for shorts. Now here's a secret tip. If you want to take your volume analysis to the next level, consider using intraday data. When looking at volume patterns, shorter time frames like 1 minute or 5 minutes can reveal more intricate details. This is especially useful for scalpers or those who trade during the day. Intraday volume can help you spot those quick moves that might be missed with longer time frame analysis. So, in a nutshell, volume analysis is your secret weapon for decoding the market's language. Whether you're a day trader or an investor, understanding volume patterns can significantly improve your trading journey. From identifying breakouts to spotting reversals, volume offers valuable insights into the market sentiment. If you found value in today's Tactical Tuesday, give us a thanks or like on the video. And if you haven't already, hit that subscribe button. Join our community of over 400,000 traders and stay updated with our weekly tactic videos. See you next time.